Hey, welcome back to Midas Letter Live. My guest this segment is Pat McCutcheon. He's president and CEO of MetaPharm Labs, Inc., which as yet is a privately held company, soon to go public. Pat, welcome.
Thanks so much, James. So happy to be on the show. I've watched you guys for a long time, and I'm really excited to be here.
Oh, thank you. Well, tell me about MetaPharm Labs. What is it that you guys are going to do in the cannabis space that is differentiated from what everybody else is doing?
Absolutely, yeah. So MetaPharm Labs is a really unique company. We've been the first company to get an oil production license without first getting cultivation.
Congratulations.
This is pretty unique in the space, and it took us a number of years to get this, and we had to break the mold of the actual licensing kind of application process with Health Canada. The one big thing was that Health Canada didn't feel it was necessarily appropriate to do oil production without cultivation first in the same license. And we felt very much that if you look at any other type of parallel kind of industries, that there's no other real comparison, especially when looking at big pharmaceutical companies, or industries, I should say, or automotive, where there's not a segmentation or a horizontal, where you have companies specializing. Mm-hmm. So we specialize in extraction, and we, I think, have the largest extraction footprint in Canada.
Really?
Yeah.
Okay, so where is it, and what's it comprised of exactly in terms of equipment and methodologies?
Absolutely. So we are in Barrie, Ontario, which is pretty unique. We're going to be the first headquartered public company in Barrie, Ontario, which we're really excited about. We have a lot of kind of local investment, and we actually bring a lot of local suppliers into the kind of the mix, and we've had a lot of great support from Barrie City as actually one of our first letters to Health Canada. The facility, which we've actually just finalizing purchase now on, is 70,000 square feet. We use 7,500 square feet of that right now, which is going to get us up to production of about 100,000 kilos of biomass annually. We've only used about 10% of the building, and we can move into, I guess, a huge portion where we can look at other extraction methodologies for other product developments.
Okay.
In terms of extraction methodologies themselves, we use supercritical CO2 extraction. We have 3 lines starting in phase 1. And then we winterize the product, and we have a number of different distillation methods that we use, as well as we're putting a lot of focus on financial and people resource allocation on downstream post-processing of smaller cannabinoids through different chromatography.
Mm-hmm. Is your supercritical CO2 systems proprietary, or do you access those from a vendor?
We access them from actually a couple different vendors. One of the things that's pretty unique about our company is because we're looking at a GMP approach, or a pharmaceutical critical environment, and that's going to be pulled through our kind of SOPs and our methodology. We've had to very much modify our equipment. So there's going to be an element of protected IP on that primary extraction, but we're focusing actually more on protected IP downstream in post-processing. Mm-hmm. So when we're looking at specific unique distillation methodology as well as chromatography. And we're targeting the smaller cannabinoids for end product production.
Okay, so you're creating pharmaceutical grade ingredients for other pharmaceutical products.
Exactly, and so we don't look actually at a distinction between pharmaceutical products or medical products versus recreational products. We're going to play in both sides of the fence, so to speak, and we feel that the top quality is as important on a medical product as it is on a recreational product.
Mm-hmm. Okay, so you're getting ready to go public. At what valuation will you go public?
Yeah, so there's a lot of great value, and there's a lot of opportunity for our stock to run versus some of our competitors in this space right now. So we're going to be launching in early to mid-September. I know we're here now, so we're expecting to launch pretty soon. We're looking to go public at just over $82 million. And actually, if you look at that in terms of a value stock, and you compare us against a couple companies that would be regarded as our competitors, Neptune and Radiant, that are already trading, their market caps are fluctuating anywhere between 250 to 500 million. And we are actually the only company out of the 3 of us that have a license, have already 10 plus customers that we're working with, cultivation partners, that we're either buying product from or processing for. And we've actually got just over 3,000 kilos in our vault right now that directly aligns to being able to show revenues immediately out of the gates.
Wow.
So there's a lot of value in that stock to run,
You bet,
James.
you bet.
Yeah.
So what about distribution, and where is it all going to go?
Well, to start in our kind of phased out approach, we're looking at kind of 2 revenue business models, and that's going to be a wholesale back to the cultivator. Our first main line is wholesale purchase, where we're doing white label solutions for our cultivation partners. Well, we'll buy wholesale from one cultivation group, and then we'll do the processing to whatever different level that we're looking at actually selling back to another cultivator. That cultivator will then sell into the different provincial distribution streams or to their medical patients. The second revenue stream will be for our just processing, and we feel that actually it's probably going to represent a little bit more of a kind of ratio of, let's say, a 60-40 percentage representation for processing versus wholesale purchase, just because there's a lot of cultivation companies that have realized now they need an extraction partner to actually execute on their business plan to get oils on the shelves. So with processing, we charge on a per gram processing rate of whatever we're actually looking at, either a crude oil, a winterized oil, or a final bottled solution.
So per gram per gram of finished product, or per gram of input?
Per gram of finished product.
Okay.
And then that will be sent back to the cultivators to then be sent into whatever distribution stream that they have negotiated with.
What kind of gross margin on those kinds of transactions?
We're actually looking at a pretty good gross margin. We're starting at just north of 30% now, as we're moving through actually 25% capacity of our capacity right now for extraction in our phase 1. As we actually move past the 50 to 60% capacity, we're looking at a margin of 40% plus. Okay. One of the really unique perspectives of our business is because we take the risk out of cultivation, we focus all of our resources on extraction and then scalable extraction. So with our last raise, actually, we targeted 15 million. We raised just over 22 million. With a good proportion of those funds, we're actually now building out our first expansion, which will over double our capacity, and then we'll then enhance those margins north of 50% once we get to those high capacities.
Okay, and you mentioned that you're only using 10% of your footprint right now. Do you have the CapEx to build out the rest of it?
We have the CapEx to build out, it looks like about 2 phases. With the completion of the second phase, which we expect to come in online for the end of Q1 next year, as I said, we'll double production capacity over 200,000 kilos. Right now, with the size of the building, we're looking to actually do another subsequent raise once we hit the target that we're expecting to trade at post-launch.
Oh, okay. Interesting. Are you at all intimidated by the crowded landscape upon which you are embarking your adventure?
The crowd, it's interesting to say that, and I think we get this question a lot in our marketing. From our perspective, it's not too crowded because we're in fact the first extraction-only company in the space. And so if you look at other jurisdictions like Colorado, California, and Washington, there's actually a solid representation of extraction-only companies. And so if you want to make the parallel to say that we're the first extraction company when there'll be, let's say, 40 to 50 companies in this space that focus solely on extraction, there's not really that much competition on that side. When you compare us to other large cultivators that are growing as well as extracting, our economies of scale and the fact that we can do concurrent customers at one time actually give us the ability to do it faster, cheaper, and at higher quality than most of these large cultivators are.
So what's your entire throughput capability at the outset?
So for phase 1, as I said, is about 100,000 kilos of biomass going in.
Okay, which yields?
Which yields it's dependent on what actually the certificate of analysis is, or the percentage of cannabinoids by weight. One of the things that we feel really strongly about as an extraction company is that we are in fact strain agnostic, and we're actually cultivator agnostic. So we can work with numerous cultivators and numerous strains. What we ended up doing is actually we just focus on pulling out that cannabinoid recovery level, and the better. We don't like to say better or best strains. We like to look at it from an analysis perspective, where if you have, let's say, 8 to 10% in trim versus 10 to 15 to 20% in flower, flower is more advantageous because we get a better return on investment for our extraction purposes. But when you're looking at the costing relative to that, the costing model in Canada, because of such limited supply, the cost is not relative necessarily to the actual cannabinoid percentages. So we're looking actually to change the industry by negotiating with our long-term sustainable kind of definitive agreement partnerships, where we will negotiate on cost per gram of cannabinoid in the starting material, and not just necessarily, I guess for lack of a better term, how the black market's looked at it, for shelf value or costing.
So does the dynamic between the fact that CBD can be extracted from, CBD is present in stalk, seed, root almost, and so you can grow outdoor hemp and extract CBD, and you can create CBD extracts from that at an obviously much greater price and volume and lower cost of input than you could if you're trying to create a high THC extract for vaporizing.
So this is something that's really interesting. As being the only company in Canada to have an extraction-only license or an oil production-only license, when the new licensing regime and the distinction between the new licenses is coming out now, and it's well pressed, and everyone I think sees this coming, is outdoor grow being allowed is an incredible opportunity for a company like ours. When I think when kind of that was released from Health Canada, that was what they're looking at. I would argue that a lot of the cultivation companies were actually not cheering, because that would actually now compete against the cost per gram production. Even though Canada is not the premier climate to grow outdoor cannabis, you can still get, arguably, 2 crops if you're doing it if you're doing it correctly, and that could bring a cost per gram sub $1, which then creates a great advantage in terms of return on investment for us in pulling out those cannabinoids.
All right, Pat. Well, that's a great intro. It's an exciting business model because there's, like you say, not too many people doing it.
Yeah.
We're going to leave it there for now. We'll come back to you once you're public and have another conversation. Thanks for joining me.
Awesome. I just want to say one thing. So we're going live on the TSXV in early to mid-September, as I said before, and our ticker symbol will be LABS.
Oh, okay. Perfect. Good one. Thanks for joining us.
Thanks, James. Great.